Hello everybody out there, how are you all doing? I'm Kate Hill, as always bringing you the best unbiased and honest content on property, along with fantastic hints and tips. Stay tuned today to hear all about Australia's housing rental crisis. The Real Estate Institute of New South Wales has recently posed a challenge to the New South Wales government in light of the reforms championed by the Minister for Better Regulation and Fair Trading, which aim to stimulate investment in the residential rental market as a means to address the growing rental crisis. The core of this plan involves levying stamp duty on investors for offering their properties for rent, followed by an array of regulations dictating how landlords can and cannot manage their own properties. These regulations include forcing landlords to allow tenants to keep pets, irrespective of the property's suitability, and requiring landlords to cover the cost of any damage caused by these pets. Landlords are also compelled to seek legal recourse to justify reclaiming their properties from tenants. Additionally, landlords are only permitted to adjust rents once a year, despite fluctuations in their own mortgage payments, which can happen every month. This approach raises questions from the Real Estate Institute, landlords and tenants alike, regarding its effectiveness in addressing the declining growth in the availability of rental properties. This concern is particularly pertinent given the substantial increase in individuals seeking rental housing, driven by natural population growth, interstate migration and international migration. Despite this surge in demand, an analysis of the New South Wales Rental Bonds Board's data reveals that the number of rental properties in the state remains stagnant, prompting the crucial question of where these incoming residents are going to find housing. Where are they all going to live? The responsibility for providing social and affordable housing fundamentally rests with the government, not private investors. If the government seeks the assistance of private investors in bolstering rental accommodation, then it might need to reconsider its approach, which seems to alienate and penalise and punish investors, the very individuals whose cooperation they need. It is essential to note that a significant portion of Australian rentals and renters opt for private landlords, with a mere 3% renting through state and territory housing authorities. As home ownership dwindles, particularly among younger Australians and those in lower income brackets, a rental bottleneck forms, impeding these individuals from transitioning to home ownership. The current rental crisis didn't arise overnight. Instead, it resulted from a confluence of factors that are unlikely to be resolved in the near future. State governments, in addition to other factors, have contributed to an adversarial culture between landlords and tenants, introducing legislative changes that favour tenants and make landlords feel marginalised. Now, this rift has grown as governments attempt to utilise private investors to bolster their own strained budgets. Factors contributing to the rental crisis include APRA's restrictive lending policies back in 2016, higher interest rates for investors compared to owner-occupiers, reduced depreciation allowances for property investors, tenant-friendly state government rental legislation, and a recent decline in new apartment and housing construction. Now, currently, 91% of Australia's 3.2 million rental properties are financed by everyday mum and dad investors. Over the past 3 decades, state governments have sold off more than 100,000 publicly owned rental properties, further exacerbating the supply-demand imbalance in the rental market. While approximately 3.3 million properties across Australia could be used for rental purposes, only around 1% of them are currently available for rent. With overseas migration and international students returning to Australia, demand for rental properties is escalating, especially in light of the recent reduction in first home buyer activity. The issue of short rental property supply is a growing concern, worsened by record low national rental vacancy rates. Furthermore, the tight rental market is shifting back towards major cities, indicating that residents who relocated to regional areas during the pandemic are actually returning to urban centres, along with an increase in international migration. This scarcity of rental properties has triggered an affordability crisis, with median rents increasing at a rapid pace, impacting tenants who are already grappling with rising living costs. While governments are now beginning to address the rental crisis, including the introduction of a national housing accord, the challenges remain significant. The accord seeks to address housing supply and affordability, potentially alleviating pressure on the rental market. However, the target of building 1 million new homes from 2024 over 5 years is not perceived as ambitious enough. It's kind of happening already anyway. Encouraging private investors to return to the market is crucial to resolving the rental accommodation shortage, because large corporations entering the build-to-rent segment is going to take time, and it's going to be limited to specific locations. The share of lending to investors is decreasing, and while build-to-rent initiatives are emerging, they may not keep pace. They won't keep pace with the surge in demand resulting from the reopening of international borders, the decline in first home buyer activity. Encouraging private investors to re-enter the market will help address the rental shortfall, as more investors will translate to more rental stock, obviously, easing demand and potentially stabilising rental prices. Now, this is an opportune time for long-term property investors because consumer confidence remains a little bit low, allowing for thorough research, negotiations in a less competitive market, in some markets. As Australia enters a new property cycle, investors can seize this window of opportunity as interest rates stabilise, inflation is brought under control. Historically, such periods of correction have been followed by property booms. Now, to conclude my little rant here, addressing the rental crisis requires a multifaceted approach that includes incentivising private investors to provide rental accommodation. While the government seeks solutions, it's not that hard. The market's inherent supply issue has got to be acknowledged and addressed to ensure affordable and accessible rental housing for everyone. Now, I'm going to keep you posted, as always, people, on all things property from around Australia. As our year progresses, don't forget to hit the like and subscribe button if you're enjoying all the free content, and I will see you all again soon. Bye.